Hey, what's happening all? It is Tuesday, the 4th. So first recording of the year. And what a year we had. 2021 was something, man. Looking back, right, the same time of the year last year, we're coming into it with interest rates extremely low due to the extreme capital injection into the mortgage-backed securities from the Fed. Then, of course, people following suit, other investments following suit, and really driving down those interest rates to unbelievably historic lows. Then you get the FHFA coming out saying, we're gonna taper back on our endorsing the real estate investor, because the belief was if real estate investors had access to Fannie Freddie money, they're going to buy up all the houses, and then of course the first time home buyers and the dream of American home ownership is going to diminish and is going to impact that negatively. And so we had interest rates jump almost overnight when that announcement came out to low sixes in some instances. But we saw the drive from Wall Street capital, public capital coming in, just dumping into the market to take advantage of this opportunity, because Fannie and Freddie are the ones getting in on that. Now others were able to build these pools. We were able to jump in there, and interest rates dropped significantly to levels maybe just slightly higher than we're at today. But what that shows is the private market, just the market itself, saw the value in the real estate investor. So even though we couldn't get the extremely low rates that were being offered by Fannie and Freddie at the time, we still got amazing rates, right? So what ended up happening is eventually they started finding that was not changing anything for the market. It wasn't influencing real estate investors to stop. In fact, I think it caused a little bit of a panic for real estate investors to start buying more, because we saw a huge increase in investors purchasing homes last year. So that got lifted at some point. Now I don't know all the details, right? I can't say for certain exactly why they did what they did, but this is just what I believe from what I read and what I think probably was going on in the back offices of these discussions. So now you can't stop the real estate investor. There's value in investing in real estate. We all know that. There's also value in backing the real estate investor, because you guys make your payments, right? If you make your payments on time, you manage your business, because it is a business, it all works for everybody. So where do we sit today? Well, we all know where the inflation is. We're still sitting in the high sixes on inflation. We know for a fact that that's based upon the index that the Fed uses, not the real rate of inflation. We know that inflation is benefiting us as real estate investors. As far as the current news, what we're seeing is that there's going to be some home price index reports that just came out. CoreLogic released theirs. They're showing that home prices rose by 1.3% in November and 18% year over year. What's interesting, if you start looking at some of their forecasts, they're saying that homes will appreciate 0% in the next month, and then 2.8% in the year going forward. Now, if you go backwards to some of the stuff that they anticipated in the past, there wasn't a whole lot of accuracy in that. They forecasted home prices will increase 2.5% over a year over 2021, but it rose 18%, right? They're missing forecasts all over the place across the nation. So when you start looking at some of these things, you got to take it with a grain of salt with what you're seeing as far as forecasts are concerned, because reality has been vastly different than what we're seeing in the realities, than what we're seeing in the forecast. Forecasts, they're guessing, but humans are going to be a little bit different with what they're going to put their money into and how they're going to spend it, right? And especially when it comes to real estate. Now let's get into some of the charts that we've got out here and see what's happening in the mortgage-backed securities. It's a little bit concerning because we've hit some levels that I was watching really, really closely. Let's just put it that way. So as you can see here, this is the 2.5% coupon. This is where we're focusing for owner occupied. The reason I'm looking at this one is because the pressure is going to put on the higher coupons, which is where we're funding our real estate investor loans. And because of that, we're going to start seeing a little bit of negative movement in the real estate investment deals. So even though those pools are staying fairly steady, this pool is putting a lot of pressure. So we talked about before, I was watching this line right here, 101.90, right? Well, we breached below it. And we hit that pretty hard yesterday, in fact. Let's take a look. Let's zoom in here and see what happened. So up before that, we ended the year, the last trading day of the year, up above it. Everything was holding. But just knowing times of the year does have an impact on when traders do certain things, right? So I believe that had an impact. And once it broke below that, some other signals hit out there and the market responded with their orders in kind. And as you can see here, we've dropped pretty significantly. So yesterday ended the day somewhere right around the 101.56 mark. Today we're sitting at 101.39. So we took quite the hammering down. Now, what I'm seeing here is 100.556 is what is going to probably be our next support, which is quite a way. So it's going to have some impact unless some sort of news that pushes it back up this direction. But also look, this trend line that we've been talking about is pushing it into there. We finally reached that point where it's found that bridge down below that support level that I've been watching. So as far as I'm concerned, I've always, like I said, if you're comfortable with the rate is lock, I locked as soon as I had my deal rock and rolling, I just pulled the trigger, and I'm just moving forward with my transactions. I'm not waiting for anything. If I know that I can get my appraisal done within that window and the property's going to be done, I go ahead and lock and move forward. But the other thing we got to think about, where's inflation going? None of these rates matter. They really don't. So you're in great shape either way. But at the same time, I want you to be aware of what's going on in the market. If you're quoted something a month or 2 months ago, just know it's going to be different. But you're a real estate investor. It's not going to hurt you because inflation is going to erode it to nothing anyway. I'll be talking to you guys again on Friday. We appreciate you. Actually, Friday, I'm going to give you a report on how things lined out for our year, production-wise, and then how things lined out for our contributions to Operation Underground Railroad, fighting human trafficking. That's the main thing. We'll get into how that'll work out for the year. So I'd love for you guys to see what that total was and how much we've been able to make an impact as a small community. Thank you.